is Monday, July 27th, 8:29 p.m. at the time of this recording. The Dow finished up 0.5% today. S&P basically closed flat. Nasdaq basically closed flat, and the 100, and then the Russell 2000 closed up a little bit over 0.5% here, 18 basis points here. Let's get into what happened today. So if you take a look here at the Qs, we do have that institutional selling right here. You see that EMA here. If I just clean off the drawings here, it is turning down here. That's not something you want to see. That's something you want to see in the leaders and in a bullish market here. So in the daily, as we discussed here on previous videos, everything does link together. We have lots of institutional support. We do have our control bar right here at 687.21. That is a level that I do want to come back above. We, of course, also broke our put wall right here at 700. And our next levels to the downside here, magnets, are going to be 668. So your levels here for the week are 668, 687, 702 to the upside. Maybe we can flip this doji up here and break this uppercase H, which is where a pivot is, where you have your original falling 3. So this is also secondary control bar. We also have our 3 black crows, 1, 2, 3 down here. And when we come here to the weekly time frame, that's where you can see it, 1, 2, 3 down. This is where your control bar is, and again, kind of just highlighting that we are turning down the EMAs. From an undercut, retest, pivot, breakdown, and breakout perspective, when I say undercut on these videos, what I mean here is if you just kind of draw here on a chart, for an example, like right here, kind of like you're going to undercut, retest, break down, roll over, or you're going to undercut, right, break down, or break out. So when I'm saying undercut, right, talking about undercut here, retest, are we going to break down, right, or we're going to break up at our pivot line, which would be like kind of right around here, and you kind of eyeball it here. Coming over here to Nvidia, we did lose our 55 EMA support. We did have a bearish engulfing candle. This is a massive, massive, massive control bar right here that you see. Your levels to the downside here are 189. Currently overnight we are at 195.51. We do have that falling 3 here that did play out today, and we did lose that 55, like I said, EMA institutional support. We don't have it quite curling down yet. I mean, it's pointed slightly down, but we don't, we're not currently kind of rolling all the way over here on institutional, but we did lose that level here, so we do need to be mindful of that. Really, my levels here that I want to mark out here, just eyeballing it here, is want to get definitely right back above that 200 level right here. Going over here to the ES, we did close above our 55 EMA, so that is good. We did hold that wall right here. This is your put wall right here. Things might get very ugly if you break that. Currently overnight we are at 738. At the time of the recording we were actually here at 737, so it looks like we had a decent gap up right here. And a level that I really want to watch to make sure that we hold is exactly that. We don't have an EMA here turning down here, so that's great. It's kind of flat here. In order for us to kind of move up here from a technical perspective, you want to see that EMA curl up, right, not down. Going over here to Micron, we have our control bar right here. You can kind of see it here, big red candle. And one of the ways I like to view the markets that I tell a lot of people is, right, and people might see multiple candles here. I see this as just one pure candle, right? Because if you go up higher on time frames, right, so we have like multiple candles here, because obviously every 15 minutes we get different candles. We go up here to like a 45-minute time frame, right? This candle starts to get smaller and smaller, and that's where I get my control bars from. So when I'm saying control bar, what I mean is you literally have a bar that's actually controlling price that you can't get back above. This looks like a pivot here, so I have my 50% retracement line, I think, right about here, and obviously this is a right shoulder here as well. Again, are we going to undercut, right? And where's your undercut, right? So undercut, when I'm again mentioning that for perspective, is like right here. Undercut, right? Retest is that green little wick right here. Breakdown, right? Or break up, So what a breakout looks like when you're undercutting here is like, right, undercut, right, we're going to break down, or we're going to break up. And these are some big movements here on some of these tickers. We did lose our 55 EMA institutional support here, so that's not great. And it's also curling down here, not up. In fact, I actually think most of, if not all of the tickers here and the SOXX, as well as tech here, I mean, all 55 EMA broken, so not good. Again, want to see those curl up here. Going over here to crude oil, we did have a gap down. A lot of people are getting confused to why it gapped down here. Well, I mean, if you just kind of look at the price range, what happened here from July 1st, and specifically here from the past week, right, what happened here. So A free tool that you have here on TradingView is price range. I'd encourage everybody to try it. It's free. So coming back over here, look at like, let's say July 17th, about 10 days. So in 10 days, we rose up about 18%. Not really a natural move, not really something that you want to see. Obviously the White House and of course, overall from a political perspective, that does affect consumers and they always want to kind of manipulate and control oil prices. Not natural to have these oil prices up, but one thing I am looking for, right, is we do technically have an inverse here, right? So on a daily time frame, right, we still have institutional support. This is one of those stocks here, right? So we have the three pillars. We have the macro, the fundamental, and the technical, right? M, macro, fundamental, technical, right? Technical is chart. That's what we're talking about. Macro is, okay, we have oil, we have the straight close, and then fundamental is, right, we do need oil, right, to do a plethora of things. It's right here, right? You have your left, right? You have your head, and then you could argue your right shoulder. The one thing I like to tell people, about chart patterns is that you have to be really unique with how you kind of view chart patterns. No pattern is equal to another, right? You can have a bar that comes all the way back down here, maybe get a tweet, maybe get another oil tank ship here that, gets blown up, right? And then, price just rockets here. So that is why you see kind of extreme movements and unnatural looking candles sometimes, especially when you go all the way down here to lower time frames. If you go here to the 4-hour time frame, right? Sometimes you see gaps here. And one thing that I've been telling people here is a lot of people talk about gaps here in the market. Be very careful with, varying, maybe this is a gap here. We're going to actually verify to see if there's a true gap, right? Because sometimes we like to say, oh, there's a fair value gap, right? But if you go over here to TradingView, and we go to regular trading hours here, okay, so I guess it doesn't have a 24-hour market. So I'll show you what I mean here. Let me go back to the Qs. So they have a 24-hour market here. I went over this last week. So you have regular trading periods, right? So you see gaps here. I'm just going to clean out the charts real quick here. So you see kind of a gap right here. We're going to mark it right here. So there's a gap literally right here. And let's just verify if that's actually a true gap here or if that's just, obviously not here. So we had a gap right there. Of course, right, we have candles filled here. So what I was looking here for on crude oil was to see if we actually had a true gap. So when I'm talking about true gaps, that is looks like it appears to be a true gap, unless if I'm missing a different, if somebody could enlighten me in the comment section, an accurate chart here. So anyways, going back here to the electronic trading hours here, currently here in after hours, we are down to 81.70 here on the oil futures, and that is something that I do definitely want to keep an eye on. Going over here to the SOXX, we have net selling. So again, when I'm talking about the 55 EMA institutional line, what I mean here, right, is if we're below that, right, institutions are not buying, especially when it's curling down. That means that we have net sellers, right, not net buyers. Net buyers looks like this, right, and net sellers looks like what? This. We do have a 3 black crows here in process. It does look like we have a possible inverse head and shoulders, here forming. Maybe this is your left, maybe this is your head, this is your liquidity here. Maybe we can come all the way back up here, grab your right, and kind of come up here. We do need to understand and kind of restructure in real time. I can say, hey, here's your wall up here, here's your wall up here, no different from how we do on the Qs. But the way some of these stocks are moving, right, you're getting like 5% moves, which again, a lot of people who are new to the market don't understand that this isn't natural, and what's happening in the market isn't natural. It's not normal. Very rare that you see kind of throughout the history, in the stock market, prices moving like this. When you just go over here to the indices, and you go over here to kind of change day over day, right? To have stocks moving up 11%, 10%, 9%, kind of day over day, Palantir 7%, all these stocks here, it's just not natural, right? That's not happened before. So I tell people, just be very cognizant with, kind of the stocks that you're picking. I think another mistake sometimes that traders make here is that they will pick stocks that, let's say they pick SOXX, AMD, Nvidia, right? But they're not approaching it from a perspective of like index sector stock. Again, there's a lot of the other YouTubers out here that say the same exact things here, right? It's index, okay? It's sector, okay? And it's stock, right? And then when you combine that with the macro, the fundamental and technical, you can understand the what, the why, and then the chart itself here. So, right, a lot of people are making the mistake right now saying, hey, well, Nvidia's down only, or AMD at the time, I think was down like only 7%. Well, maybe Nvidia's only down 2%. Let me go to the index of, right, say, QQQ, and the sector is SOXX, or you can say the sector is just technology, right? You can interchange all those terms, and then you go down to the specific stock here, right? A lot of people are making the mistake of saying, hey, let me go long in Nvidia, right? But then when you look at the overall picture here, for the SOXX, it just doesn't really make sense here. So going back to the Nvidia chart here, right? Someone's going to try to go long on Nvidia, right? But really, what you're going to see here in all the sectors is it's really the same chart, right? You still have your head and shoulders, left, okay, head, right, you know, and you have multiple head and shoulders, right? So here's your original, you know, left, here's your original head, and here's your right here. You broke down, but you're forming a larger one here. And when you form larger ones, right, you're building more and more liquidity, right? You're building more buyers and sellers. So when you also see like a choppy market, right? I mean, like, have you really gone anywhere? Here's another free price tool range on TradingView. So if you just do the date range, let's do from here to here. So basically for 100 days, or like basically 3 months, we've gone absolutely nowhere. And that is where sometimes, you know, if you're on lower time frames, let's say like a, you know, 10-minute time frame, when you start to throw on like indicators, right, you start to get like a lot of buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, right? That definitely throws off indicators, right? So I that's why I caution people, just be cognizant of, you know, the way that the market's moving. I mean, this is a choppy market, but right now it's bearish overall and a bullish trend. And I think one thing that people are not, you know, entirely getting here is that like the S&P's really gone nowhere. So sometimes people are like, oh my gosh, I missed the crash, and it's like, you haven't. Where have you gone? So from the peak right up here, just drop the price range. How far down are we from the peak here? So at the time of this recording, SPY is at 738.03. Let's just go here and take a look here. We're down approximately like 3% from all-time highs. Let's say just down here, okay? Even if we're down here, which we're not, we'd only be about 5% down from all-time highs, right? Obviously, the Nasdaq over here, if you kind of just look at the chart from the top down here, we're down more of a significant amount. That's obviously because the Nasdaq is the leader, as it should be. So if we just look at the price range here from the top to the bottom where we're at currently, 678 here, we are about 10% down, which does make sense. So going back over here to the SOXX, one thing that I am paying attention to is, can we get back above this wall right here at 511? Maybe we create an inverse head and shoulders, maybe we don't. One thing I also like to do kind of outside of this is, right, drop down my time frames, clean everything off here, and start to look here. Is there any other patterns? Is there any other things I can see from just right? We're not talking about macro fundamental, just from a technical perspective. So right here on the daily, let's drop it down here to like maybe a 4-hour time frame. Yikes. And again, you can kind of see your control bar, right? So you have an evening star bearish pattern right here. You have a massive engulfing bearish Maruzu candle, one of the most bearish candles you can get, right? And that's where you have a control bar. It does look like you have a pivot right here that rejected right here. So a good way to kind of understand, right, where, and again, right, I wasn't looking all the way over here to the left of the chart. Notice how I just marked this pivot here. And one kind of pro trading tip that I recommend doing here is, a lot of people will try to get involved in like some of these chop zones right here. Like maybe like right here, maybe like right here. And why not get involved kind of at the end of the finish line? So the way I kind of compare the market, right, is like you have war zones right here. I really don't know generally, nor does anybody else, right, if the price is going to go up or down, right? But what I do know is, right, we're chopping here because I have my levels marked out here. One important level here that it's marked out here is just 518.61, right? Maybe you can put a little bit lower, maybe you can put a bit higher. But when you look at the specific zone here, right, you literally go down, right, or you go up here. You go down, you go up here. So, right, let's just kind of look at this price right here to see how many times you visited here. 1, 2, 3, we have 4, we have 5 here, so a 5th time here, right? And actually, just kind of a tinfoil hat theory, I'm just going like full on speculation right here sometimes is, right? And all these zones here, like these are how I kind of view the bull markets, right? You keep getting these bounces here, you keep getting these bounces, right? Bounce, okay, right? Bounce, not a bounce, excuse me, kind of down, right? Bounce right here. And the one thing that I've been warning people about is one of these days, right, you know, bulls keep, right, buying the dips here, right? What happens if like the dip just isn't getting bought, right? So originally, right, you're thinking that, you know, the SOXX here is going to go up maybe tomorrow because of a technical bounce, because we're down 2%, we've been down maybe 3 days here. And the problem here is, right, you come back over this pivot here, you have all these dip buyers, right, even though you have net selling, right, because we lost our 55 EMA institutional levels that we marked out earlier. And then you end up like down here. So sometimes the other mistake that people make in the market, right, is that you have like maybe your average is up here, price is up here, you think that it's a good opportunity because someone's saying like, hey, you know, buy it and, you know, market's going to continue to go up and et cetera, right? So you're slowly averaging in, not taking profits. But then the problem is, right, you're slowly averaging in here all the way up here when price is doing what? Coming all the way back down here. At a certain point, you run into a big issue because, right, here's your average, right? right? And it came all the way up here, and it dipped down here. You thought it was a good buy, so then you rebought in here. Then your average becomes here, right, instead of here. So, right, there's a big difference. 434, maybe you can tolerate it, maybe you can't, right? And maybe here's like another level here, just at an eyeball glance. So you have 518.61, I believe. Got fat fingers, I apologize. Right, so here's a good level here. And then one thing that a lot of my students are aware of, right, are cup close theories. It's a proprietary kind of idea that I have here. The difference there is it's not based on kind of confluences. It's based on where you start is where you end, right? So where you start is where you end, right? And, you know, some people might call it distribution. It's a whole bunch of things. It's just the way I see the market. And I think an important thing that I like to tell people is my ideas don't have to be your own. I like to put my own twist and spin on it, right? And one of those reasons, right, is, right, you know, kind of going back here to the cues, if you look at the charts here, is you have to be a bit creative with how you see the charts here. You have to be a bit creative with how you see the market here, right? You have to separate yourself from other traders, right? And Wall Street, the market's already rigged against you. What are you going to do with the information that you have, right? Do people view this as like several candles, like I mentioned earlier? Or do people view this as one candle? I view this as one candle. It helps me kind of process things because somebody might be trying to look at this candle, this candle, this candle, this candle. I'm like, that's just too much information for me, right? For me, it just kind of helps me understand, like, right, we came down here, so, right, if literally if you went up to like a larger time frame, this would just be one red candle. It's just that simple for me, right? And so, right, we do have to be aware and I think prepared to, you know, again, if the terminology that I'm not, you know, saying is making sense, right, you have to make sense of like what makes sense to you, right? So for me, right, if I'm saying undercut, right, retest right here, which technically you could argue that's what's occurring here. So right here, are we going to undercut, right? And let me show you something here. So let's mark out this level right here. Right, so I'm talking about, when I talk about undercut and retest, right, when I talk about head and shoulders, when I talk about different things, people forget, right, that like, let's say this is a left, this is a head, and this is a right shoulder, and you did break down, right? Well, you broke up, and then you broke your head and shoulders, right? So this is one time frame here, okay? Then you have another left, another head, another right, you come down here, you have a falling wedge here, then you broke up right, okay? So this pattern played out. You didn't quite break your head and shoulders. So for me, right, now I'm like, okay, now this is developing a larger head and shoulders, right? So here's your left, here's your head, here's your right, or right, get this, maybe this is your left, right here, okay, this is your head, okay, and then this is your right, okay, from a bearish perspective. Maybe from a bullish perspective for bulls, right, another way to kind of look at charts here is, right, so when we talk about undercut, right, retest, breakdown, okay, we talk about that, right, so then you have your undercut, retest, breakout, you have your undercut, retest, breakout, okay, you have your undercut, retest, breakdown, and then again your undercut, retest, breakout, and right, it goes on. And one thing that traders forget, right, is that that's why the past does matter and it is relevant to the future. And again, that's just me being creative, right? You don't just have one thing happening here. You don't just have one head and shoulders. You have 1, 2, 3, that's a head and shoulders, right? 1, 2, 3, that's a head and shoulders, right? You have 1, 2, 3, that's a head and shoulders, right? So you have patterns within patterns within patterns, right? That's just a 4-hour time frame, right? Go down to maybe like a 15-minute time frame, and how many other patterns do you have, right? Now you can kind of see it more clearly. Here's your left, here's your head, here's your right. But within these patterns here, what else do you see, right? So heading over here to SK Hynix, and one thing that I have mentioned many times on videos is, right, we have a market with no leaders, and basically the Nasdaq has to, in order for the Nasdaq to continue upwards, we have to have a leader, right? Well, right now it's not semis, so then what is it? It's nothing right now. Mags are rolling over, technology is rolling over. We do have rotation here into the Dow, right? But like that's not going to push the market up. What's going to push the market up? It's what we've been bidding up the entire time, which is AI. And that kind of leads me to the next segment here. Another kind of thing that I want us to start paying attention to in the market here is, so we have another kind of example here. This is Nimbus, or Nibius. I apologize. I'm not well versed in how to pronounce half these names here because half of them are new. And one thing that I like to point out to people is, I don't know if this stock is new in particular, let me just check here. 12 months here, looks like it's been here since 2011. I mean, 15 years in the market, fairly new, right? Because you have companies like Intel that have been here a lot longer. So right here, you have Nebius right here. And this actually just reminded me here of an issue that's occurring here. So I'm going to circle this chart right here, just a reminder. I'm going to put R for reminder for me. And I'm going to go back down here to that daily time frame. And we look at the daily time frame. Here are my levels. A level that I really do need to get back above is right here at this 206 level here. That is a control bar candle right here. Bearish Maruzu off of evening star reversal pattern here. And sometimes the way to kind of measure the velocity or kind of viciousness, if you will, or bearishness or bullishness of a move here is, right, how long did it take to go up here on the chart, right? So again, this is where it's a free tool here. So it took me about, let's see here, from here to here, it took me about 2 days here to go up here on the chart. We went up about 19% here. So, sorry, right here. And if you drop this one down here, from here, from the top here, from the peak here, we drop it down here. How long did it basically take here to, I guess I'll have to do it from here. How long did it take to go down here? It says negative a day here, that's not true. Let me just look at the day here. So from the top here, Thursday the 24th here, to Friday the 24th, it basically took 1 day here to kind of wipe out that entire move. That's not something you want to see in a bull market. That's not something that wants me to get involved in a stock here. That makes me want to get involved in the stock, excuse me. And another way I kind of view, by the way, head and shoulders right. Here's your left, here's your head. Maybe your right is right over here. Maybe it's kind of down here, right? We're gonna have to kind of measure that in real time. No different from the SOXX right over here and micron, right? And these other pictures I've been showing you. Here's the SOXX. And we again going here to the daily time frame. Excuse me. Maybe we're gonna get it inverse head and shoulders, right? So again, one thing that you notice here on the charts here, right? A lot of them have the same exact pattern. It's kind of like a smiley face, right? Here's the eyes, here's the nose, right? I'm trying to be funny with it, right? And coming back over to Nebius, right? Almost the same chart. I mean, practically the same, right? So you have your left, okay? Your head. Maybe this is your right, okay? Maybe your right's up here. But bottom line here is, these are my levels here. I did mark a wall here from opening price here. So if we go over here to Nebius and we look at the wall here, so where did we open up here? So we opened up price today right at this level at looks like 196 point. Let me go to 830. We opened up here today on Nebius at 196.76 here, and this is your wall right here. And this is a pretty clear sign. You never even came back up to retest it right after opening, except for maybe within the first 6-7 minutes. And then right, you just saw like net selling. So when I say net selling as well, this is what net selling looks like, right? You don't have any buyers stepping up here, right? Going back up here to Nebius, of course, we lost our 55 EMA institutional line here. Not quite what I would consider curling down yet. I mean, is it in downward slope? I mean, yes, but it's not like full on kind of down, if that makes sense. So to me, this is kind of flat, not neutral. But again, we do have, from just a technical perspective, net sellers. But going back over here to the chart, we can kind of see kind of opening price here. So one thing that I challenge you guys to do is every time you have an opening kind of candle here on any stock here, mark where you opened up at and just watch it, right? Look for structure, look to see what's happening here, and kind of a good green light for me sometimes, you know, if the structure supports it, right, is we get back above our opening price, we hold it, and then we break out. And just for an example here, if I just come off the chart, let's just pretend like, right, this is, let's say this is opening price here on Tuesday the 31st here, but let's just pretend this is Tuesday too, right? So you have opening price, which is right over here, okay? And then your barcode, you break down, you break down. You see an inverse setting up here, like, am I going to go long yet? Because Hollow Point told me to mark my levels, not financial advice though. And right, you create structure above here, and then you break above, and then maybe we get involved in a stock here. But again, a very key and important thing that I think a lot of people need to do is making sure that they have their levels marked out. And one of those key levels for me is making sure that the opening price is marking out. One of the easiest trades that you can possibly take here, which just requires you to be cognizant of, like, right, again, where are we opening up at? Is, you know, does it look like institutions are getting involved? Do you have, you know, control bars here forming at opening price? Do we have inverse head and shoulders? Do we have morning stars, bullish and band and babies, and kind of so forth? Going over here to Microsoft, I'll chart this one with you in real time. I left this chart empty on purpose. We don't have institutional support here. We did close below that right here, and at the moment it is curling down here. So I'm currently looking at puts. From a technical perspective here, I'm going to go ahead and just mark my levels in real time with you. So one thing I like to do is I like to mark from the top bottom just to get a general idea of like the overall picture, okay? And I want to know that date range too as well. Sometimes I use it, sometimes I don't, but just for this case, I want to know that date range from that second rejection here. So from here to here, we've been barcoding for about 270 days here. So when people are kind of freaking out about, you know, is the market going down, is the market going up, I like to tell people, like, relax. You know, the market, you know, isn't, you know, for half these stocks, they're really not moving. You haven't gone anywhere. And that's what I tried to demonstrate with you with Nvidia, right? for the past 101 days, if you remember that I mentioned over here, you've gone absolutely nowhere, right? So, right, you really haven't missed out on anything, right? If you forgot to go long, you forgot to go short, right? Like, you have an opportunity to get involved. Going back over here to Microsoft for the example here, right? So we have our chart right over here. We have our inverse head and shoulders possibly setting up here. Maybe this is your left, maybe this is your head over here, maybe this is your right shoulder. It did look like you kind of undercut. So again, from an undercut perspective, right, we broke out here. So undercut, retest. We're holding just barely. We still don't have the 55 EMA institutional support. Do I see it? Oop, oh no, man. Please say, please. Oh man. It's a bummer. Please. Okay, cool. We do have an inverted hammer here. So kind of like a neutral candle here. It doesn't really tell you much. Some people have their own twist on it. I'm not going to really make much of it. I need something else to kind of make a decision for me. Or excuse me, rather for me to make a decision. I need another candle here. I'm going to go here to the weekly time frame here as well. Just trying to look here to see what's going on here. Not really getting a clear picture here. So I'm going to go ahead and just mark my, I'm going to get rid of my fibs here. So right here I don't have a, hide indicators. So right here I don't really have kind of any confluence to really tell me to go long or short. This looks like something that's kind of choppy and I don't want to get involved in. But I want to highlight kind of what I just said here. I'm going to delete all the indicators here. So the one thing I want to highlight here is, let me just delete all these drawings here and start again here. So what I just mentioned here is hopefully it really does truly help somebody out there that's trading. It's really that, like what I mentioned, you know, we don't have any kind of zones that we should be getting involved in with right here. So if you just kind of mark right here, and again, I know I'm on a weekly time frame, I don't really see anything that's like, wow, I really have to buy Microsoft stock right now, right? I don't know, that's from a weekly perspective, daily perspective, kind of the same thing here. Don't really see anything. I mean, I see like an evening star reversal here, but I also just see a bunch of chop. To me, this is a war zone that I talk about where I'm like, I don't want to get involved. I want to cherry pick, right? I want to cherry pick maybe when we get to this kind of zone up here, of course 424, right? And what is that? Why is that a good key level? You can kind of see that confluence right up here. You literally go down or up. And one of my philosophies is, right, if the market's already tilted against you, the market itself is already 50-50. When you start trading against the market itself, I mean, you're talking maybe about like a 1090 because, right, there's a lot of people that aren't doing well. And then when we take it a step further, right, we look at the actual technicals itself. I feel like right here, just looking at the chart, I'm not setting myself up for a really good trade here. In fact, this is really bearish. You could also argue, right, this is a bearish pendant. You could also argue, right, that's a bear flag as well. So when you talk about candles here, right, I'm going to give you a very unique perspective here. So, right, from here to here, someone's going to see a bunch of candles. The way I see it here is, let me show you this. So if you go to like a 4-month time frame, let's just do 4 months, right? You see one candle here, or you see 3 candles. So you have 3 candles here. This is an evening star. You can say tweezer top here. Not quite a dark cloud cover here, at least from a 4-month perspective. But right, again, kind of coming back down here to a 1 day. All these candles here, right? So when I say I see candles, that's kind of like one candle here. Go back to the 4 months up here, right? Like you have a few candles, right? But my principle is there's less clutter. That's why I like using higher time frames, and that's one of the unique perspectives that I have. Gonna go back down here to the daily time frame here, right? We don't even need fibs here. Just drop that bar here, right? And what's price doing from here? So here's the bottom approximately. So, right, looks like you're coming about all the way back up here, right? Looks like you have a falling 3 bearish reversal here, honestly, right? Look at that, okay? What do bearish falling 3 reversals do? They do this, right? In order for me to break out the bearish falling 3 reversal, technically, where do I have to break out of? I have to break this control bar from the top up here, right? So, right, and how far can you rise up here? On rising wedges and rising 3s here, falling 3s, whatever you want to call them here, you can come all the way back up here, actually break and validate and break out, right? Or you can meet it halfway up the candle, get that 50% here, and then reject here, and then that's where you get your bearish engulfing candle, which is what you saw here on the Qs and some of these other stocks. A really good example of that is Nvidia here, right? So you have a falling 3 or whatever here. So what I'm talking about is exactly this. So if we go here to the daily time frame and we look at the chart here, when I talk about falling 3s here, this is exactly what I'm talking about. You don't have to come all the way back up to the top here. But again, in this instance you did. So right here was an evening star here, okay? and then this is another evening star, but you also have a rising 3 up here, right? So here's the bar, come all the way back up to the top here, right? Go back to Microsoft over here. Maybe you can come all the way back up to the top here, maybe break the top of this level up here, break out, but more likely than not, with kind of how things are going from just a macro perspective, maybe break down here. I think another thing that people are kind of missing out on, right, is that Google, right, going back over here to Google, raised CapEx, right? So a lot of people are still forgetting that Google basically is losing money here on free cash flow. So FCF is free cash flow. So, right, Google is currently losing money on free cash flow. And one of the things that people are forgetting, right, is they're losing money, so they're negative, they're bleeding, so they're negative, they're not positive. I was going to draw a negative sign. So free cash flow, they're negative, right? But they're spending more. So I'm losing money, right, but I'm spending more. And that has a lot of people concerned. I think the other thing that people are missing here from a perspective of Google and some other stocks is that they have to spend more though, right? These are supposed to be a growth and kind of hyper scaling companies. That's what the SOXX was supposed to be. That's what Nvidia was supposed to be. And I know what good looks like, but it doesn't look like this, right? This is not what you want to see here from a company, right? That is really bullish and kind of so forth. I have a chart over here that I want to share with you guys, so stick with me here. So I have this chart right over here, kind of regarding the market here. So I call this the circle. Nvidia funds the buyers fund Nvidia. Nvidia invests, cash returns as revenue, and then we have obviously your other deals here. So really, what does that mean right here in the chart here? Okay, so for me, basically Bloomberg earlier dropped a chart here, or excuse me, rather dropped the chart last week mapping the AI deals, the deal web, right? There's 50 plus relationships here within some of these investment lines. Oh crap, where'd it go? Where'd it go? Hello, where'd it go? Here we go, baby. So right over here we have basically 50 plus relationship investment lines, harbor lines, service lines, and all knotted together into something that looks like a circular diagram drawn by somebody having a bad night, right? Everybody looked at it and said the same word, this looks like fraud. And frankly, that's what I think is happening here. But I also think that maybe that's the wrong word. And if you're trading this using the wrong word, I think it's going to cost you money because its points point you at the wrong risk. So I'm going to show you like what's actually happening here. And hopefully this can tie into everything that we've been talking about today, right? All these charts, all these different things. I apologize. I didn't go over SK Hynix that much. There's really nothing to go over. When I'm looking at SK Hynix to kind of go back to it, I'm just going to compare it to Coinbase. And so let me just pull up SK Hynix. Let me pull up all these other IPOs here. And this is one of the charts here that I want everybody to kind of understand here. So I'm gonna hide all. I'm gonna put this chart up here. This chart up here. Hello. Here we go. Here we go. Here we go. And we don't need any of our indicators right here. Remove 7 drawings and 7 indicators right over here. So you have SK Hynix. We can go to the weekly time frame here. And again, I can pull up a lot of different stocks here, but I'm just going to pull up a few. And I'm going to pull up a few that really you guys should be paying attention to because I don't want people to lose money. And I feel like, the market's going to cause a lot of people to lose money. We're going to pull up MSTR. Okay, we're going to pull up Oracle. We're going to pull up Adobe. Oh, we're going to pull up Oracle. We're going to pull up Adobe. Okay. And from my IPO perspective, we're going to pull up SpaceX. But I'm going to show you an example here, right? So it's almost the same thing every time, right? SK Hynix, right? From Coinbase Global here, which is just, Coinbase crypto, right? It's the same chart every time from an IPO perspective, but it's the same chart almost every time from a stock perspective. It's about vicious rotation, and they get people every time here, right? Very important chart that you guys have to pay attention to, right? Everyone thinks that this is it. Crypto's going to $1,000, but it never does, right? Or excuse me, MSTR is going to $1,000, talking about Bitcoin to $1 million. That's just not what's happening here. They do the same thing with you on different charts, but people just aren't able to see it here. And that's what I'm trying to help you understand where institutions are thinking and where they're trying to put their money here, okay? So right over here, right, you have Adobe over here on the weekly time frame, right? So it's the same chart, almost every stock, every time. Doesn't matter if it's IPO, right? Just go here to eat, right? We're gonna go here to a weekly basis, or it's already on a weekly. Let me go to like maybe a 1 month basis here. So here's a different stock, obviously that not a good example here. Maybe look at Rocket Lab here. So I mean, again, right? You're fairly a new company here, right? But the problem here is it's turning to the same exact chart. I thought space was bullish, so then why be selling down here, right? Well, I tell people, no, we can't say, we can't say this, we can't say that, right? if the market's bullish, right, we simply should be doing what? Going up here. There's really no reason to retrace. There's really no reason to, and we're not, these aren't retracements. These are like, right, that's like, a, if you're to show somebody that, right, when this was kind of burned out here, like this is bearish, I'm not getting involved here. But we're getting these kind of candles here from a monthly perspective, and almost now, right, look at these candles here, we're getting them almost from a daily perspective here, right? Look at this candle here. I mean, that is yikes, right? So everybody was talking about SanDisk to 5,000 and it's undervalued. Well, if SanDisk is undervalued, why is it all the way back down here to 1,200? Oh, but people are taking profits. Well, why would they take profits if it's a growth company, right? And that kind of leads me to like my next message here, which I was trying to get into, is this circular deal that I think is all fraud. So I think there's 4 moves, right? So if you strip the chart down, right, if you know 46 of the lines, there's only really 4 steps I think that matters, and they all run in one circle, right? So here's how I want you to think about the market here. Nvidia writes a check to an AI company, right? You get an equity stake, a strategic investment, call whatever you want, but basically cash leaves Nvidia, okay? Then you have an AI company, right? AI company can be any of these, right? Then you have an AI company, right? It turns around and spends that money on GPUs. Whose GPUs? It spends it on Nvidia's, right? The cash comes home, right? And you can replace Nvidia. It's about the concept, right? So, right? And then basically the cash comes back home. And 3, Nvidia books this money that they gave out, right, back as revenue, and then their top line grows. And so the market reads that number as a customer demand. The problem here is the revenue growth lifts the valuation higher and higher, meaning that a bigger balance sheet, meaning that there's a bigger balance sheet. So there's more paper to deploy and there's more checks to write. So now you're back to step 1. What was step 1? Nvidia writes a check into an AI company. So right, here's the process. Nvidia writes a check here, they spend it on Nvidia's chips, and they send it back to Nvidia, and Nvidia is able to basically make another check out to Anthropic. They spend it, able to send it back here, and Nvidia is able to make a check to CoreWeave. Same thing here. So now you kind of see like what's going on here, and this is the big problem that people have. Step 4 here is revenue growth lifts the valuation. Higher valuation means a bigger balance sheet, more paper to deploy, and you have more checks to write. So then, right, it's just back to step 1, and then it's a circular kind of situation here. And even though I just used the word fraud, I guess why the word fraud is wrong is fraud requires 2 things: a material misstatement and intent to deceive. I guess I don't really agree with how I kind of wrote this out here. I did have AI kind of help me. I mean, I think they know exactly what they're doing here. So, I mean, is there a fraud? We can't accuse people of doing fraud here, but I mean, if it smells like it, it looks like it, and it tastes like it, right? Then, what is that, right? And so fraud requires, I guess, 2 things here. Intent to deceive, right, apparently, and a misstatement here. Not like, right, we had kind of COVID and pandemic, some of these other things here, right? But anyways, right? So every single deal on that chart is disclosed as 10Ks, 8Ks, press releases, funding announcements with the dollar figures printed in the bold. And basically, Bloomberg didn't leak anything. They built that chart from the public filings. You can't defraud somebody with a document you publish yourself and mail to the SEC. That's where we disagree. I think where kind of the deceit here is, right, like a lot of investors don't know. They're going off of basically what Jensen and some of these other companies are saying. Well, hey, Jensen, if your company's so bullish here, right, then why are you all the way back down here? Why isn't there actual growth here? People forget that Nvidia just designs the chips. But the way he speaks, you'd think that they're like basically solving cancer. They're not. They're literally helping kind of basically they're the leader if they're pulling everybody together and kind of going back to that item that I mentioned earlier, which is right, write checks, they spend it on them, and they give it back to them. I mean, most people would say that's fraud. So right, if I have a bank account, I have 2 bank accounts. One bank account has 5,000, the other one has 0. If I just keep transferring money back and forth, back and forth, back and forth, it's going to show incoming deposits and outgoing deposits, right? It makes the books look bigger. So yeah, your expenses might be like equivalent, right? But then the problem here is, right, Nvidia just doesn't have, Nvidia doesn't sorry, I'm malfunctioning. I'm trying to do this raw and unedited. So Nvidia doesn't just have, right, one bank account. They have multiple, right? But they're not just sending out 5. Maybe they're getting back like 6, 7, 8, 10, 9. So right, where if I'm transferring money from this bank account to this bank account, right, I'm taking out 5 and here sending it back. Well, this bank account's maybe sending back 10, and that's where you get the ridiculous earnings growth. And it's not just from them, right? All these different companies here that they're utilizing, right? They're sending them 10, 15, 20, 30, 40, right? But nothing is actually like being produced, right? They're just transferring money from each other to each other to each other, right? Like hot potato. What's hot potato? Like the market that I'm trying to show you here, right? Hot potato, right? Transferring. Oh, transfer. Oh, transfer. Oh, transfer. Oh, transfer. Right? And then where does that kind of lead to me to? Where I feel like markets do get deceived, and so do investors. It leads you to here, right? So when you look at stocks here, right? I thought crypto was amazing. A lot of people, they get stuck up here at 421. And by the time you get all the way back to 421, how long did you wait to get back to break even? Go back here to the price range, or the date range, excuse me. It took you approximately, right, about 1,500 days. You barely wicked above here. Let's see, 429. You came up here to 419. I mean, I think you actually went higher. Maybe it's not showing here on TradingView. I could be wrong here. The point is, you were there for like less than like a week. Then you came all the way back down here. And that is the problem that the market's having right now, and that I think a lot of people aren't realizing. It really does lead to a chart here like Adobe. And that's where I am passionate about just educating people, where it's like, hey man, just be careful. You know, like obviously none of this is financial advice. These are just my own thoughts, opinions. But this is where I stay up, trying to make these long videos to kind of help people. Like, this is how I view the market here. Doesn't mean I'm right. Doesn't mean the way I view candlestick chart patterns are right. But I'm very passionate about understanding, like, what is Wall Street thinking about? What is Jensen gonna do? What is the market gonna do, right? Are we gonna crash? What is Trump gonna do, right? One thing that we haven't even discussed here is the war with oil. And kind of going back over here to oil, I think one thing that people are kind of forgetting here is that, like, Iran, right? They're not opening up the strait. So if Iran's not opening up the strait here, right, then what's going to happen with oil? And what's going to happen with shipping? What's going to happen with the global economy? It's going to collapse. So there's only one thing here that's going to change the market, and I think Trump has full control of it. They have to stop Iran, whether it's by force, etc. Like he keeps saying he's going to do. He keeps saying he's going to bomb them every day, but he doesn't. And what's happening is that Hormuz is closed. The one answer for this tell outside of levels, just from a macro geopolitical perspective, is Trump needs to commit to what he says he is going to do. Okay? If he can't commit to what he says he's going to do, what's going to happen? Last year, right, if you go to the market here, this SPY here, just for an example, right, what happened with liberation here? Obviously, like, we just gapped up regardless here, but when we gapped up here last year, when we had the liberation, all that good stuff, depending on how you look at it, depending on what side I guess you were on, okay, we had that liberation here, but nothing got solved. The market just shrugged it off here. So the market shrugged it off here because, you know, it's tariffs and, like, you know, it's this, it's that, right? What they can't shrug off is an actual straight closer where it doesn't just affect tariffs, or if they were even here. It affects you as a consumer, wise for you. It affects the prices as well for companies, right? P for companies, I guess, because I can't spell. Oops, my bad. C for companies, right? And then affects the global market here. So, like, tariffs affected the global market per se, but at the same time, right, like, it really didn't, right? There was all these deals that were allegedly getting made. Well, the problem here is the bottleneck is, right, we're in this AI infrastructure race. Materials are getting pricier. There's sketchy deals here from Nvidia that don't really make sense at all. And now we actually have a straight closer where we're being told that after like 2 weeks it's supposed to be critical. Well, guys, it's been like 4 months. If we don't get the straight open here by the beginning of August, I mean, a few weeks ago we were told it's going to be catastrophic. Well, August is right here, like in 5 minutes. Excuse me, 5 days. So what's going to happen here? I do want to show you guys one thing here. So if you go here to like a 30-minute time frame here, the past 2 Augusts, I believe, I don't know if that even, on August 1st, maybe that's a Friday, so that could be this Friday, because August 1st I think will be on a Saturday, correct me if I'm wrong. Let me go to like a 45-minute time frame here. So if you go to like August 1st, let me just check over here. Okay, it's not what I want. August 1st right over here. It's a Sunday, okay. So if you just look here, I believe it was Fridays too. If you go here to like 2025, on August 1st we dropped here. This is outside of technical. This is outside of kind of just tinfoil hat here. Go to the daily time frame here. I just want to go to August 1st here. So we have August 1st. Where's that at here? 2025, 2024. We had the carry trade unwind here back in August, right over here. Okay. Uh-oh. And then we go to 2025. Friday, August 1st here. Okay. You've had a few times here where you kind of see right kind of around this range, you kind of get a big move here. I don't know. Maybe we go up, maybe we go down. I've already kind of given you my level, so hopefully you feel like you guys found this helpful. But it's these things, guys, that I look at every day. I think about every day. I have in the back of my mind to where I can just randomly pull them up on stream and continue to talk, right? To where, you know, this is how involved I am in the market. I know these dates where we drop, where we don't drop, and et cetera, right? But it's these different things here that are going to make you unique as a trader and give you a chance to be prepared here in the market. I think everybody here is doing a great job. I believe in you. If you're having a tough time, you know, just join the Discord, join the live stream. Maybe listen to my thoughts, maybe you don't here. But either way, I hope that you're winning and that you find it satisfactory in all aspects of your life. That's it for today. Goodbye. Calls out here at open. You can kind of see it corroborated 8:35, literally within 1 minute of opening here. Up $1,060 here. Started a fresh new account for some of the members here today, just to copy trade that. The calls went ballistic here. We called as well 679, 680 calls right here. Also went ballistic here for 74%. I think they peaked out. We finished the day with $4,000 worth of profit here. Let's see how the members did today here. I'm going to go through them here real quick. Then we're going to show you the tape here in real time here. So we members did quite well today, taking some of these calls here and puts. We're doing both ways here. People following along here, people doing great. We also did have a member here today as well that got a payout. So congratulations, J-Bob, one of our members of the week. Congratulations, everybody give him a round of applause. But seriously, because I think payouts and getting payouts, it demonstrates serious discipline here and wherewithal to make really good decisions here. So seriously, congrats, hats off to you. He took a $2,000 payout, and he still has a lot of drawdown left here to manage and kind of work with here. Let's go ahead and take a look at the video to see what happened.
Below, niggas snitching on the team. Once I get the pole, I'ma dump it after 1 week. Always pay attention, paranoid, I can't even blink. Just a crazy nigga started sober, I don't need no beat. Ayy, pillow talking to the bitch, I thought you was a homie. Pull up to a crib and I made the bitch blow.